Yeah, hello guys, this is Asphalt FX Academy. So in this video we'll be dealing with what is called market structure, because in financial trading the first thing you need to know as a beginner trader is market structure, that is the trend or the direction of the market. Okay, so this is going to be the part 2 of our market structure analysis. So let us dive into it. Right. Okay, so the trading view is loading. Let's wait for it. All right, so before the trading view give us the chart. Okay, so don't forget to subscribe and hit the like button on our channel. Okay, all right, so let's get started. All right, so in this video, the last video we talked about the market structure in our part 1 video, and as you know that market structure is divided into two. The first part is the bullish trend, while the second part is the bearish trend. And in our last video we talked about the bullish trend in our last video. So in this video we'll be talking about the bearish trend. So what do you know about bearish? If we're talking about bearish trend, we're majorly talking about the selling opportunity when the market is coming down, when the sellers in the market, when they set into the market to sell whatever kind of assets they have available. You understand? So that is when the sellers are set in. You understand? So it's when the price of the market, when the price of any kind of asset is going down, is going downward. That's why I call it a bearish movement. All right, so let me give you how the bearish movement goes. So and as you all know that in a bearish movement we have two important levels, right? We have the lower high and the lower low. All right, let's stop here. So good. As I've said that in a bearish trend we have two levels in the bearish trend, which is the lower high and the lower low. And the most important level in the bearish trend is our lower high. So why is it important? Because in trading you can't just be predicting. You need to know the facts why this thing is happening. You can't just be predicting, be doubting that okay, is this going to be in this way? No. You need to have you need to have yourself in check. You need to have your confidences. You need to have your confirmation. You understand? You need to know that this thing is supposed to give me this before I do this in trading. So in the bearish movement, the reason why I said our lower high is very important is that, let me give you a life scenario. As a seller, as a rational seller, you understand, you can't you need to be waiting for the price to be high before you can sell. Why are you waiting for the price to have an high price? Because you want to make more profit. You understand? You want to do you want to make more profit. That's why you're waiting for the price to come high, to come up before you do before you sell. Why do you sell at an higher price? You sell at an higher price because you know that in the subsequent period, in the subsequent X amount of time, the price will definitely do what? The price will definitely come down. And if the price come down, you can't sell as at that time, because if you sell, you are not going to make profit. So it's better to sell at an higher price in order to make profit as a rational seller. All right, so let me point out those lower high and the lower low for you to see. All right, so we have our first lower high here. It gives us what's the lower low. We have our second lower high. It gives us what's lower low here. We have our third lower high. Third lower high give us what's lower low. Give us lower low here. The last lower high here. So the last lower high produces what's this lower low here. Do you understand? Right. So the first lower high here, the sellers, they setting into the market with the expectation that they can sell here in order to make more profits at a lower high price. You need to know that in a bearish movement, you sell at what? At a lower high, not lower low. You understand? So when you sell here, when the price go down, give us lower low, you make your profit. So the price come up, another seller comes into the market to sell at a lower high here, with the expectation that the price will definitely come down. So the price come down, give us lower low. Yeah, it makes its profit. So that's how it is. You do what? You sell at a lower high, not a lower low. Right? Alright. So, and in a bearish movement, you should know that we have two important levels also in a bearish movement, as we have that same levels in a bullish trend. In our part 1 video, I will need you to watch the first video before you watching the second video in order for you to understand what I'm actually talking about. Okay, so in a bearish movement, we have two important levels as we do for the bullish trend. So those levels are what we have: the supply zone and the demand zone. So the supply zone is known as the resistance level, as you know, and the demand zone is known as the support level, as you know. So in a bullish trend, if you can recall that I said that in a bullish trend, our resistance level becomes what? Our resistance level becomes our support. If the price breaks the resistance, it's going to automatically become our support level in a bullish trend. Alright, so, and as you know that in a bearish trend, our support level, when the price breaks that our support level, automatically is going to become our what? Our resistance our resistance level. So let me show you this. So this is our first resistance level here. Okay. Alright. This is our support. So when the market breaks that support, it turns towards to resistance automatically. So I will explain that to you guys for you to understand how this thing works. Alright. Okay, so as you can see, we have our first resistance level. First resistance level here that I'm pointing at. So when the price came to that resistance level, as you all know that at a resistance level, which is also known as our lower high, we need to sell in order to make more profit there. So we sell at a lower high, we buy at what? At an higher low. So now you sell from this resistance level, the price come down, it breaks this support that we have. So automatically that support turns to resistance. It came here, it gives us lower low. It touches the resistance back that was support before, touches the resistance. So another seller comes in there, sell at that level. So the price come down, breaks this previous support. It breaks this support, turns the support to resistance for us. It gave us lower low here. It gave us new support. It touches the resistance which was support before. It breaks what? It breaks this new support, turn it to what? Our resistance. So that's how it is, which is very, very simple. So you need to know this in order for you to what? Understand the chart, how the chart moves. this is how chart moves. Literally this is how the chart moves. Okay, so the chart will surely come down, the chart will surely go up. So that's how they move. And you need to mark out your levels, that is your support levels and your resistance levels. And as I said in the part 1 video, that in a bullish trend, our resistance level becomes our support, while in a bearish trend, our support level becomes our resistance level. And if you want to sell, if you are looking for an opportunity to sell, you sell at a resistance level, not at support. If you want to buy, you buy at support level, not at resistance. Please note that. Okay, so here now, if you want to sell this market here, actually, if you want to sell this market actually here, so we are going to wait. We need to wait for the price, for this current price here to come up here before you can sell. You need to wait for it to come up here before you can sell, and come down. So wait for it to come here, to this resistance level, and come down here to sell, to give us a new lower low. I hope you guys understand. To give us a new lower low, right? So if you want to set in your sell, your shorts, if you want to set in your short position, this is how to do it. All right, set in your short position here. So set in your short position here. So that's how to do it. Okay, so it's very simple. Okay, very simple. So this is basically the rudiment part of bearish movement. These are the bearish movement moves. So, and again, don't forget that you sell at your resistance level while you buy at your support level. So in our next video, we'll be talking about the ranging market. So don't forget to subscribe and click on the like button in our channel. Okay, thank you.